Smile, guys, smile. Markets are up despite increase in taxes. Let me see who smiles more. Starting with Bala Naren. Taxes have gone up and markets are up. Smile more.
Sure.
Yeah, clearly,
So you have-
I think the market is also, of course, happy with the kind of budget, which is more growth-oriented budget. In fact, when we were asking Swaminathan English here, how do you rate the budget? I was talking about 10 or 6 out of 10 or maybe 7 out of 10. Probably I would give 9 out of 10 for one simple analogy, rather logic, that one, growth momentum is being maintained. A very significant focus that has brought in order to make India's growth self-sustainable, both by increasing the allocation towards the rural sectors and energy sectors, as well as the stimulating of custom duty to ensure that now timing-wise, India is running a current account almost more like surplus. So the good timing to actually relook at some of these custom duty to ensure India is able to also become efficient on the export front. And last but not the least is, despite all the allocation that they have made it for growth perspective, the fiscal roadmap is also very, very encouraging. I think reducing by 20 basis points this year and 4.5% target that they have kept for next year. I think all of them are pretty interesting, good, and at the same time, I think the overall momentum and the growth could be maintained. And finally, on the income tax slab changes for individuals' point of view, definitely money coming in the hands of people and the middle class income people is also something that's very encouraging, as PM just mentioned about that. And last but not the least, I see one or two very innovative skill development program which I saw, which is of course out of the box idea, I would say, which is creating intern as a mandatory working in top 500 companies and make those students who are able to get that internship program with the top 500 companies, therefore they become employable for the future. That, in my view, is a master stroke, quite innovative approach. And this will, because many times we all get requests for intern and making it more organized.
Right. Naren is having coffee and I'm also missing my coffee. So Naren, cheers. Let's have it again.
Well, I think see, the government over the last decade has managed macro very, very well. Every year they have looked and seen which are the areas where they can actually afford to increase taxation and not hurt the sectors. So I think they've done a brilliant job if you look at it. The market can absorb it. Otherwise, the market reaction today would have been quite different. That is the reason why I think it's a great budget at this point of time. You have to see, in a country like India, which is not a rich country, you have to continuously find avenues to tax, and you have to use the tax revenues in the right way. And I think, and continue the growth momentum. I think, and you have to ensure that jobs are created. And I think on that count, I think it has been a great job done actually on the macro side. I think it is almost impossible that that's why India has GSEC yields which have not gone up in the last 3 years. Whereas you look at government securities yield in most of the developed markets, they are going up and their macro is looking bad. So I think that is the biggest thing. The challenge to the markets has got nothing to do with the budget. The challenge to the market is that there is very elevated investor sentiment and valuations are not cheap across the board. But what has that got to do with the budget at this point of time? It has got to do with the fact that sentiment is good and valuations are high, and things are good. So that has got nothing to do with the market, and that is the challenge we grapple with, because we tell people to be cautious, and it's very tough to get people to be cautious.
What makes the market, or what re-rated the market, was when there was a cut in corporate tax and P multiples started going higher. What has diverted flows back into equities is equity gets a better asset class treatment in terms of taxation, and also economy is growing. Now that the tax arbitrage is reducing, could that have an impact on the long-term tax proposition of equity as an asset class?
So in our opinion, sorry.
Yeah,
If
Naren,
equity
question
market
is for
starts
you.
growing a bit slowly, if equity market starts to give a bit more moderate returns, I think it is useful in my opinion. I think even the economic survey talked about it. I mean, I go back to what happened in with Harold Minsky in US. Basically, you can't have a market which only goes up and up and up, and people forget the word called risk. So, in our opinion, I think we have to be prepared for a period where equity markets do give some risk and also go through a period where they give moderate returns. So, either they give moderate returns or they show risk. One of the two can happen at some point of time in future. And investors have to be prepared for it through asset allocation. And that is what we've been telling investors, and that is why I don't think it is a wrong thing, because that is why I think in a way steps this year that the government has done by reducing capital gains tax on real estate is a very interesting step, because if you look at equity market, you have huge volumes of transactions, and people sell maybe what they own maybe every year. Whereas in real estate, because capital gains tax and the frictional cost associated with transactions have been very high, they have not been selling what they own for years. So, with this kind of reduction in capital gains tax, if transactions start happening faster, maybe we will have a slightly different environment. And what happens due to that will be interesting for us to watch. From our side, from financial markets, it will be interesting to see what happens when you remove indexation and bring down capital gains tax to very low levels like what it is today.
I have a similar question for Bala. Bala, the India story, equity market flows is centered around SIPs, long-term investor. That's how markets are moving. So for somebody who's watching the show and has got a SIP, should they just ignore today's change in the taxation and say, okay, it doesn't matter? I mean, if I'm looking at a possible 12 to 14% return in next 5 to 10 years, 1% here or there, frankly, does not matter.
I think my view is it doesn't matter, Nikunj. The increase in long-term capital gain tax from 10 to 1.5%. The longer the period you hold, it becomes a fraction of your income. So therefore, that's not something one should bother about it. I think SIP culture that got built in the last few years, and SIP way of investing now has become a way of investing in the capital market. Definitely would have to be continued. I think would continue, given the fact that most of the investors' aspiration is to not only, of course, save in a systematic manner, it also creates wealth for the future needs. Therefore, that I think will have to continue. Increase in tax, ideally speaking, should not have much impact as long as you are a long-term investor, you're not a short-term investors. And second is the budget reinforces the confidence not only on the economy, also addresses various needs of the economy for it to sustain for the future growth. At the end of the day, the stock market is driven by the earnings keep increasing as time passes, in line with nominal GDP growth plus some risk premium. If that has to maintain the overall growth momentum, that should continue. The nine factors, which I can call it as the nine navagrahas kind of thing that they have now addressed it. This basically goes to show that how do we ensure that economic growth as a country is maintained, and yet we have a very healthy capital market by bringing in these kind of changes. And last but not the least, the tolerance for the risk. Also, we must admit that has gone up the last few years because the wealth effect has been quite good. It's not just coming only from stock market; it's also coming from, in general, the price level that has gone up on fixed assets such as real estate, or land assets which has gone up, agriculture assets land prices have gone up, and therefore the clear focus that the government is bringing in on the way other revolution has happened in identifying every individual in the country. A similar identification process they are creating actually for the land bank in the country. Also, I think ultimately would ensure that every citizen in the country, for the land that they own, they have proper documents, and therefore their ability to get refinancing from the banks will become far superior. Therefore, the ability to take risk or converting hard assets into cash, all this probability will increase quite significantly. Therefore, from an investor's point of view, SIP should not be linked with taxation. Therefore, they should stop. They should continue to make the investment, given the fact that we will continue to remain one of the most fast-growing industry in the economy in the world, and the country will continue to be in the radar of global investors as somebody to watch out for from longer-term point of view.
I'm going to get, there's a lot of noise in the studio. I think everybody's excited here. Boys, I'm asking a question. Boys, pardon our viewers. Then final question, we are talking about only equity markets, but the hint is come for the fixed income market. Hint has come for the bond market more. Reasonable assumptions, inflation hopefully coming under control, good discipline on the fiscal deficit front, and a commitment towards capital expenditure. Do you think now it's time to also look on the other side of the fence? We think in equity markets, bond markets are boring and dull, but this budget has made the bond market interesting.
No, for that you need a little bit more volatility in equity market. Otherwise, what has happened is that my colleagues in the fixed income side are fine, but equity market has been just far more interesting to invest in for investors. I think investors should certainly invest in debt, and that's or in asset allocation. That's what we call it. And I think it is absolutely imperative that they should invest in asset allocation and not in equity at this point of time. But having said that, people have just totally ignored debt at this point of time. And I'm really worried about that. But one episode of volatility in equity market is what will drive that interest into debt. But the government is managed macro so well that debt is also not volatile and equity also does not correct because India's macro and growth has been good. But at least equity is not cheap at this point of time. So hoping that some amount of volatility will bring back interest, but we keep talking asset allocation, asset allocation, and asset allocation.
We appreciate your time. Thank you for joining us. We started the show with a big smile. That smile. Markets are up.
Thank you.
Budget risk is over. Markets at an all-time high. Naren, raise your glass. Cheers. Bala, thumbs up.
Cheers. Cheers.
Thank you. Yes.
Thank you, guys. Let's take a break.
If you like this video, then like, share and subscribe to ET Now.